Good day. Ira Epstein with your agriculture wrap-up, and this is for Monday, the 24th of February, 2020, just getting on to 4 p.m. Central Time. Now, the first announcement, there will be no updates tomorrow that I normally do, end of the day wrap-up or an early morning update. Not going to happen tomorrow. Wednesday morning, there will not be the morning wrap-up, but barring a 12-inch snowstorm in Chicago on Wednesday, you heard what I said, I intend on being in the office Wednesday afternoon. So I'm taking off on a pre-planned event for tomorrow, the morning of Wednesday, back Wednesday afternoon, and then I should be fine and back with you. So what happened today? Well, if we look at the grains, all got hit. In fact, it's pretty much a sea of red if you look at cocoa, sugar, coffee, cotton market, energy markets, the stock market, a monster break. Metals up a bit, not all of them. Copper market getting hit today, dollar up a little. So it's the coronavirus. They can tell you all they want, but this is what's got the market fearful. Demand and supply both getting impacted until China can start taking more of our meats. Meats, by the way, went limit down in many of them today. And the grains. You still have building supplies. And think of the date. We're at February 24th. I know it sounds crazy. You're going to start talking planning intentions if you're in the grains right around the corner. It's right in front of us. In the energy market, it's a question of finding where there's a number that even with reduced demand due to the virus issue, there's a certain inelasticity to demand for energy. I know that that's something you won't hear a lot, but there's truth to it. You're not turning off your electricity. You're not going to stop driving. They can stop it in certain cities. We've seen it. We saw it happen in China, in part of northern Italy now. I believe it's 10 towns near Milan. They've shut things down there. And we could hear more of this as countries come to grasp with the virus and how to best quarantine it since there's no vaccine yet for it. Things to think about. So you start money panics and you get these monster days down. Now, as big as the Dow is down, it's not the biggest percentage day down. It's a big point day down. And that's because when you come from a market that was near 29,000, it's easier when you fall to get a lot of points. So as we look at the grains in the soybean market, for the week we're down 16 cents, first trading day of the week. We're back into this area that we've talked about so often. Is the market going to do anything with this 870 zone and punch through it or not? That's going to be the question. When we look at a daily bar chart, you went through this last break low. So here you are when you're on the daily chart for the May beans. You're pushing the 880 level. We haven't been down here in a very long time. You cut through everything on the chart, but let's take today off. Was there a trend coming in? I don't think there was. You had an outside day down on Friday. You had a higher high, a lower low coming in. You'd been in this bit of a consolidation zone and you broke down. Where was the battleground? If we take a look and remove today, the 18-day average of closes was the battleground. So going home on Friday, you had to close at 899, no trend. Because you were over the 18-day average by a fraction, I'll call the bias up. If we take a look at the Bollinger Band, what am I going to say? I'm going to say that typically the first time you hit a band, on the upside or downside, I look for the pros to take some money off the table. By that I mean, obviously not the longs taking the money off, but those that had made some money on shorts might be doing that as early as tomorrow. And you have a market that has momentum going down that is not yet oversold. This momentum's got a ways to go to get oversold. I'm not going to be here tomorrow to tell you what's going on, but we'll try to cover that on Wednesday afternoon. And yes, I told my clients I'll be out of the markets for tomorrow, so no position issues for me with them. But as I take a look at how we're going here, I don't see that as a narrow Bollinger Band. It's more of a panic situation. And when we look at the meal, you went from on Friday, the upper band to the lower band today. This was a real head fake. Getting up through that high is not what I thought, this one right here, what the market would do. It went up there, immediately reversed, big outside day down, I think you'd agree with that, gets right to the lower band and boom. So now, do you pick up any momentum? Well, in this market, when you reopen tonight, I'll be very surprised if you're steady that you're not oversold. It's the way that the math works on the slow stochastic. So I'm looking for a market that comes in oversold. Certainly there can be more lack of demand for the product, and we got to worry about the supply. But again, there's no trend. I just see sideways action with certain downside bias. Soy oil, trend down, bias down, oversold. Again, you bounced when you hit the first time the Bollinger Band. Now you've had a bit of a rally. I would have felt so much better hitting that 18-day average, because then I really put more faith in this lower Bollinger Band. But again, I do think the pros that use the rally, they might use pivot points, other areas playing it. I wouldn't be surprised if they took some money off the table. Big down days on a Monday could lead to a small reversal, or more of a reversal day on a Tuesday. What I don't see is a fundamental reason for the markets to lift out of here into a new uptrend. I see the fundamentals of the day still being bearish in the markets. In the corn market, you had held the lower Bollinger Band. You did that on Friday, already oversold. So anything you get from here now, the question is, does it start feeding on itself? It's a little different because you were already at the lower band. So now we'll call that a mini breakout to the downside. Does it have any legs to it is going to be the key. The battleground, if you try to get a bounce tomorrow, should be wherever the lower Bollinger Band comes in, and it will come in lower. Can the market get over it? That'll be the fight if it tries to go up. In the wheat market, let's get back to Friday. If nothing else, the first challenge of a 100-day average in a Bollinger Band, you'll hear me say it over and over, if you get down to it or up to it, wherever they're together, it's where I look for the pros to what? Respect the market. That's what the market did today. Can it go lower? Of course it can go lower. You do have a downtrend in place now. You didn't have it on Friday, or did you? If you look at Friday's low, it was 551. The low here was 551.5. So the reality is, the way that I use outside days, you had lower highs, a lower low, objective right into that area. We'll see if the market can do anything from there or not. All the markets are seeing problems, big break. Will they get margin calls tonight that push the markets a little lower? Could easily happen. In the sugar, you've backed off from the upper Bollinger Band back to the 18-day average. No trend. What you have here is a higher set of lows, lower highs. So you're narrowing in like this. You need to close under, well, first you got to take out 1450 to turn the trend down, is defined by the swing line, and you'd have to close under 1471. Momentum is leading price to the downside, but we'd expect that on a day like today, given all the markets around it that fell. In the coffee, it just looks to me like it's a market backing off to try to challenge the 18-day average of closes. It is certainly not acting like a market that had this big break. I don't know if that's behind the market or not. In China, I saw the news, and there are people starting to come back to work in Beijing, Shanghai. By accident or by design, at first there was a message in Wuhan to let foreigners that have been quarantined leave. Then they decided to pull that message back over the weekend. But obviously the situation, even if they're getting those messages ready and they change their mind, something's going on, more on a positive than a negative scope in China. Our problem is we don't know what real numbers are in China. They keep changing their methods. Italy, you'll get the real number. In the cocoa market, to me, the breakout occurred today when you took out 28.21. Now the question is, can you reach for the lower Bollinger Band? Resistance should be back up at 28.39. Trend down, bias down, momentum down. In the cattle market, limit down today. Now, I didn't see the cattle on feed as being a limit down market, just to be honest. That came out on Friday. To me, what this is a market that had gone down on Friday, got to the lower Bollinger Band, looked at the news over the weekend. You saw that the 10 cities are quarantined in Italy. You're seeing Iran's got, 40 some odd people with it. You know, it's spreading. And as it's spreading, it's spooking people. China even changed some of the restrictions on American imports of beef to them today, which normally would be friendly, but nothing can withstand this virus right now. And in my opinion, that's what put this market down. The hogs were down 240 points, not crashing, which was interesting. They're finding that they have higher lows, pulled back to the 18-day average. We'll see what it can do here. Because it closed under it, the bias isn't up. It was on the other days. Maybe the pros were net buyers today. I don't know. The market didn't go limit down, so when I see those things, it gets my attention. You heard me mention pivot points. And what they're used for during the day is traders are looking to see, is there some event in the market that allows them to come in, come out, to try to scalp, if you will, the marketplace. They're looking for edges within it, points in the market that you get some support, resistance. The pivot point itself, when you plot it on the graph, and if you have nice charting software, anything today basically has this that's worth its salt. It'll have this center line, and then you get resistance points above and support below. Days like today, the pros watch it. Now, you develop rules, like if it gets X% over the first resistance, the odds start favoring. You get to the second resistance. Does it mean you come out of your shorts or not? Well, if you get over R2 or under support 2, people have rules for that. We discuss this in detail. We explain to you the formula, and it's a 3-part video series. Then I explain how to plot it using your own charting software, but then I'll turn in something you generally don't see, and we're going to take a chart, and typically it's a 15-minute chart or so. We're going to plot stochastics and teach you how to work the two together. And from there, you get a game plan if that's what you're looking to do, and that's the big if. This is not a position trading tool. This is an intraday tool. How do you get the videos? Go to our website, www.iraepstein.com. You'll see other offerings. Take advantage of them. We'll get everything in your hand. I'm Ira. You have a good day.